The dream is powerful, isn't it? A steady income from your investments, covering your bills, freeing up your time, living off dividends. But beyond the dream, what does it actually take? How realistic is this goal for most people? The basic math seems simple enough. Your invested capital multiplied by the dividend yield equals your annual income. $1 million portfolio yielding 4% generates about $40,000 a year. But that's the gross number before taxes. And more importantly, that calculation only tells you what you're getting today. It says nothing about tomorrow. Here's the first reality check. A high-quality, well-diversified dividend portfolio typically yields around 3 to 5% over the long term. But that figure should be treated as guidance, not a guarantee. And just as importantly, dividends are not like bond payments. They aren't fixed. A high yield isn't automatically a good thing. In fact, a very high yield is often a warning sign, a signal of a falling stock price or a company in deep trouble. What truly matters is sustainability. Can the company afford to keep paying? And even more important than today's yield is dividend growth. Think about it. If your dividend payments stay flat year after year, inflation is silently eating away at your purchasing power. You're effectively getting poorer. So long-term success isn't about finding the highest yield. It's about owning companies or funds that can consistently increase their payouts over time. But it's not just about growing dividends. Imagine a stock that pays you more over time and becomes more valuable. That's the power of dividend growth. Rising payouts signal healthy earnings, often leading to higher share prices. It's the ultimate investor two-for-one deal. But the biggest determinant of all, the one factor that trumps everything else, the amount of capital you've invested. No amount of clever stock picking or perfect market timing can make up for a small starting pot. Dividend income only becomes truly meaningful at scale. Even that $1 million portfolio we mentioned, under favorable conditions, will likely generate no more than $40,000 or $50,000 a year. That's enough to live on in some places, certainly, but it's a world away from a lavish lifestyle. So what's the most practical approach? For most investors, dividend ETFs are the answer. They offer instant diversification and simplicity, which is crucial, especially when you're starting out. Going with individual stocks gives you more control, but it demands constant monitoring and the emotional discipline to not panic during a downturn when a company cuts its dividend. And you have to understand the risks. Dividends are never guaranteed. They can be reduced or cut entirely. Inflation is a constant threat to your real income. And the mindset you need when you're living off this money is fundamentally different from when you were building your portfolio. Stability and risk control become far more important than chasing maximum growth. Ultimately, living off dividends is possible, but it demands realistic expectations, sufficient capital, and a disciplined long-term strategy. It's not a substitute for interest, it's not a guaranteed paycheck, and it is certainly not a shortcut to wealth. Used correctly, however, it can provide a stable and growing income stream, and for some, a durable foundation for long-term financial independence.